Okay, recap for Thursday, 30th of April 2026. I'm gonna do this one quick because I just done almost a 20-minute recap and then realized my audio was not working, which is great. Let's just clean all this up, right? I'll just do a quick explanation today. Today was weird, right? Because in yesterday's recap, I explained the three scenarios that we're gonna do. We basically did the third scenario, right? With the Asia like going up and coming back down, right? And this would normally start with a New York that would kind of dump, right? Everything was set up, but for the stage of a New York dump, right? How do you see this? Well, if we look at the 1 minute, just look at the stats, right? Just look at this. It's just obvious that it's a low resistance liquidity run being set up. That's number one. Number two, and this is why I didn't take the trade for today, is this normally stays intact, right? Because when you see it in regular trading hours, these lows will stay intact, all of them, right? For one clean run. I mean, like all of this for one clean run, including the other lows to run against, but they had FOMC shenanigans at the end, which taken these lows, which made it a bit lower probability, and I haven't seen this before on this type of model, so I decided not to take it because I just never seen, right? Like either follow the rules or don't follow the rules and get cooked, right? So now that I know and I've seen it, right, and it's validated, now it can be added to the playbook where I can trade this model when I see it, even if we did this kind of FOMC garbage, right? Essentially, what made me think is gonna do all of this, right? Like I explained these two, but if we're just looking at the 15-minute, you're waiting for something. You need to look at the structure, right? What When you're looking at the 15-minute structure, you're just trying to outweigh what could stop us and what could push us to a certain place, right? If I'm looking at here, do you see any 15-minute discount fair value gap that's not used or anything? No, there's nothing. This means like if you're just looking at it, you'll see we've used this many 15-minute value gap and this other one. And then after that, there's realistically nothing stopping us. This is low probability, but after that, especially after taking this low, it's free game to this low, right? And what's this? This is London's low. So theoretically it would be all these lows and it will be all of these two lows, right? This normally stays intact and we would take all of this and then we would have something like an SMT or whatever to push us higher, and we'd normally stay in our range or have the second low if we make relative equal lows with this, whatever, right? There's many ways, but like you don't care about all the other ways, you're just caring about catching the dump from 930. So when I came to the market at, what was it, like 9:15, right? I'm just looking at them like I had the 1 minute lined up and I'm just there like this seems odd, right? Why did we have to come all the way back to a high? Just remembering that algorithm visits liquidity, right? This was our all-time high basically for yesterday. And notice we came back to sweep the high again, even though we swept it, right? Remember, these reference points stay. Like it's not like it's gone. This was what was the high where the stop loss is. We're gonna still come back to it again. And notice once I put this line, that was the high. That's why I checked it in the 1 minute. I was like, interesting. We came all the way back up, and the only time we stop and have a failure swing and respect the rejection block is once we reswept the high. That's why I knew basically we're gonna dump. We're gonna do that model, right? And I had them two validation points of the 15 minutes. If we just go through them like nothing, that means it's free game to the lows. Why? Because if we do the discount of this range from this high to this low, a typical expansion of all-time high is coming back to discount. Then there would be a liquidity under it, and I'm talking session liquidity, right? You can see our session liquidity, the first one, was higher than the actual discount. So that's your number one red flag that we can't really be bullish yet. And number two is this part this how I was seeing it set up. It was getting set up basically, right? So this all of that comes to the conclusion of this model. So I knew this model was most likely gonna happen, but just because of the rules, like I said, these lows can't be taken. Like I've never seen it when these lows have been taken. So that's why I just decided to just, you know what, let me watch it. Is it gonna play out? And if it does play out, it's a win in my books. It's cool. I don't take the trade, but the next time it happens and it doesn't line up the way that I've always seen it for like 30 times line up, then it's fine. Why? Because FOMC or whatever other news, earnings reports, whatever, right? That caused something basically after four to take the extra sell side, right? And you can take it. On top of that, it was wilding amount of volume, right? Like this 400 points, 400 points going back up, but like it's a mess. Right? It's just genuine mess. It was risky to even try to attempt it. But anyway, this it's the same model, right? You have the 930 dump. It's either gonna come back into the 930 gap midpoint, or if it's gonna make it as a breakaway gap, which clearly is gonna make it a breakaway gap. Bonus points, if it's gonna make a breakaway gap. Once you have your invalidation points, like for example, for me today it was them 15 minutes, and it just eats through them. Just know it's not like something that you're gonna use as a inversion fair value gap or what. No, this will stay as a breakaway gap. Then it will create this mini first presented fair value gap, right? It can wick into it. It sometimes can close above it for a minute or two, or just start consolidating around it or whatever. But that will be your entry regardless. In a perfect day scenario, it looks like this, right? One wick into it and it's gone, and then you get your second validation once we have a displacement through the midpoint or the discount of our range, which tells you we're gonna deliver. Once you have this, it means we're gonna deliver, and once you have your basically displacement through midpoint, then there's no need for the first presented fair value gap to get visited again. So your stop loss is safe at what do you call it? At break even, and happy days you can just go all the way to London low, basically almost guaranteed. I mean, not London low. It depends on the low for that whatever day, but most of the time it'll be all the lows except the last one, right? As a guaranteed kind of low, that objective to reach to. If it doesn't and it comes and makes kind of a relative equal lows like here and then comes back to lunch, it will start stalling here and then it will do the second dump. That's where you can get your second entry. If it doesn't do that, don't do anything for the day because it could do this, which reverse the whole day, or it could do kind of this and then come back and then can come higher, and whatever it is after the dump is low probability. So just don't take it unless you see the launch model, which is kind of rare, and normally it happens on bearish market structures, not bullish ones. We're in a bullish market, we expect all-time highs. So if you missed the short, that was easy. Get out of it. Leave the market. There's another day. And that's exactly what I did. There was just no point. I just need to see if my model is still gonna hold, even though there was some BS yesterday. That's about it. Um, what else? What else? I don't think I missed much, and there isn't really that in-depth explanation like the last time because I can't be asked to like add another 10 minutes into really how this one works. But this is helpful enough, I think. What I expect for Friday, right? Again, it's the bullish market, blah blah blah. Let me just remove the drawings. Um, like I said, it's all-time high, so do not look for lower prices. This confirmation was our confirmation for us being still bullish, right? Because a typical market, if it's gonna turn, it actually does turn a lot on FOMC. That's something I noticed. So if we were gonna go visit lower prices, this was the opportunity. Asia does this exact same thing. We would go higher and then we're gonna continue. I mean, we'd dump here, but we'd stall. And then for the next day, we'll actually continue and dump it lower. Taking this high just tells you everything. This now is a balanced price range. I don't know if you can look at it, but visually, it's so obvious. From here to here, watch this, right? And now drag this bar This is basically a balanced price. Can't even speak. A balanced price range. I would not expect lower prices tomorrow at all, even though it's a Friday and whatever, and maybe TGIF. But I would leave the TGIF for Monday or Tuesday. I would expect Friday like this, right? Like, do you see this Friday where we just, you know, kind of shut down and then went up, basically kind of made the balance price range here essentially. You see this? Watch this. Same thing. This area, and watch once we go above it, of course we're gonna stay on the upper half, but once we actually go, right, like once we take in the high, watch this relative eagle, we're never gonna come back to this. And this is something that I would expect basically for tomorrow's price action. It is not really gonna spend time trying to like come back low. And we have done enough damage. This day made sure whoever's trying to catch the all-time high run again is cooked. They did it again with FOMC Wednesday, cooked them at the end, and then done it overnight market with Asia. Is the damage has been done. Tomorrow, I would realistically just aim for high prices, right? It might be a bit um you know, stally, right? It might take some time. It might be like a 10 a.m. trade or whatever. But I would not look for, oh, this is some nice relative equal lows or whatever, right? No, you're looking for high prices. Let me just double check with ES. ES actually ran up so much higher than NQ. And it did, it did basically. Let me just see actually. Would I not missed it if I traded ES? Nah, I did the same thing. It did the same thing. I'm pretty sure that had to be an earnings report. Anyway, regardless, that is the market recap. You seen enough of what I mean, right? This model repeats. It's basically, I would guarantee it once every 2 weeks at least, maybe once every three. Sometimes it could happen 3 times a week, right? Whatever it is, it looks different in many ways. The entry is different in many ways because it could be the 930, it could be this, and but you will know your speed depending on what happens. So yeah, nice to see it work again, even though this part was taken. But again, the TP is the same, so it doesn't really matter. So yeah, it is what it is. Anyway, that's the market recap. Peace out.